Morning traders, Paul here with GammaEdge. Today is Thursday, the 2nd of June. Let's get started. Pause your player, please. Read this. Important to you, important to us. When you get done, hit play. Starting with the market model, keeping it simple here with the ARCX cumulative tick. That's the symbol tick RC. We had a failure out of the open yesterday. Everyone should have seen it if you were watching the tick. Basically, we failed, didn't get that continuation pattern that we like to see. When we have that occur, protect some profits that if you got in down here, you obviously want to protect those. We're now kind of lingering above what we call the ribbon or the historical moving averages. It's going to be pretty crucial to remain above this to have any confidence in a bull case here. We're looking for a continuation upward here. We want a positive slope on this, much like what you see across the opens here. Additional failure and dropping back down into the historical moving averages will be a problem for the bulls and could actually open the door for the bears. That all being said, we've got some things here in this presentation that may mitigate some of that. One thing to note, we do have a positive slope on the shortest moving averages. We are actually positive trending now on the slower moving averages. And so if this trend continues, if the white CT, the cumulative tick here, remains above the ribbon, we will eventually converge and flip. That is actually a bear reversal into the bull case. We're several days away from that. I would not expect that in the short term. Everyone should be watching this. This is a very crucial market model for the short term as well as the intermediate to long term, and I think everyone can benefit from this. Overall, the indices, the SPX, the SPY, the Qs, and IWM are all showing increasing bearishness. We're seeing cumulative net gamma, negative gamma add on across the board, and in most cases, with the exception of IWM, we're seeing calls being removed or positive, short-term positive gamma being pulled out. That is a bullish indication across the board. We're seeing more and more of that, so this bull case is under pressure right now, and we're looking to play the downside. Here are the Qs and the IWM showing the same. Near-term expiries, we've got mixed setups again. You can see that the cumulative lines here are either biased on the negative side or biased on the positive side for the SPY, biased on the positive side for the Qs. This is tomorrow's expiry for the SPY, the Qs, and IWM. Today, the 0 DTE for the SPX is relatively balanced. Note, we're very close to the zeros in all of these, and when you're close to the zeros, there's no pressure. So expect whipsaw, expect back and forth. You can see the transitions between red and green here, which indicates we've got just a very sloppy setup in general, and I'm expecting loss of directionality, loss of pressure, and basically chop. So I think today will be more of the same. Taking a look at the gamma histories, a lot of verbiage here that I urge everyone to pause and read. The key takeaway here is that we are seeing an increase in the negative GEX over here on the SPY. We did see some monetization on the call side. This does suggest this tight bound here on the Qs, does suggest people are positioned to take advantage of a move up or a move down. On the Qs, I note that the call open interest has jumped upward. That is typically not a good sign for the bulls. What we like to see in general is we like to see GEX moving up towards that, and we're not seeing that confirmation. We're just seeing potentially the closing of calls here, exposing that higher level. So we're actually thinking the Qs are under pressure and potentially are positioned to take advantage of a downside move. The back and forth that you see here in IWM, independent of the low options volume recently, is indicative of being on a threshold. We actually calculate this multiple times during the day, and that's why you see this bouncing effect right here. What this is basically telling us is that we're seeing positive GEX move up and down, but with a drop of minus GEX, it's very loose, it's very noisy. So I think we have to be prepared for a downward move. The fact that we have plus GEX sitting right at the key level above, any move up, calls will be in the money. We could see a monetization, which will drop us further. Not seeing an anticipation of that. We would normally see minus GEX move up in that scenario. The fact that minus GEX fell could be construed as a positive outcome. But remember, IWM has got low volume and low options volume. Be very, very careful of drawing any inference in that. Overall. Flow summaries, red across the board. On the short term, less than 30-day expiries, you can see that we had puts added, calls closed for the SPY, puts added for the Qs, relatively net flat on the calls. And IWM, again, you can look at the levels here. We did have some calls that were added, which could be construed as bullish in the short term, but bearish. We had puts being added. And across the board, we had puts being added for all the expiries that are out longer than 30 days. Across the board here, we're thinking net negative bias downward. The true gamma zeros, true delta zeros, were right in the mix here. Here's the 4,200 level. To the downside, the 4057, it's dropped a little bit. If we lose 4057, it opens the door to 4,000, and then that opens the door down here to 3930. I will note that we have dropped positive trans. When we drop positive trans now down to 4105, all of the strikes above this are in positive, net positive gamma territory. That's good. You can see we've got a line in the sand here around 4128. We banged on that a few times yesterday. That'll be a key level, which should open up the door to breaking through 4150 and then pushing up to 4175. I do note the futures are up, and we may open up here around 4150, so we'll want to watch this 4128 level. Looking at the 0 DTE, as I said, a week expiry. We closed right in the transition zone, which is really no surprise here. Above the 4130, we got positive gamma. Below the 4080, we've got negative gamma. We've got a mix of deltas here. When we see that, it's going to be very hard to see that. There's a lot of pressure here. The expiry is weak, although it's negative. Not inferring a lot there. Not really seeing a lot of pressure here. You can see the key levels. Keep those in mind. If we're above these levels into the close or below these levels, we could see an acceleration in either direction. Looking at the combo, both the AM and the PM, you can see here above 4145, net positive gamma. Below the 4080 again, net negative gamma. This is the transition area. We're right in the middle of that. You saw on the earlier chart that we had this back and forth with all these zeros and the deltas in here. I want everyone to be cognizant of that we are dropping the net negative deltas. When we drop net negative deltas, it's going to be very, very, very hard to push north. This is dropping. This is a bearish sign, excuse me, and I'm getting more and more reluctant to call that we're going to move towards 4,200. That being said, what you'll see here is that we are growing on the net negative expiry for June as well as the end of month, and then we are growing here at 4,200. Everyone's stacking up on 4,200. We're seeing a lot of gamma grow there, a lot of opening positions there. We're down here. We're remaining down here. The other key thing I want everyone to be aware of, aside from the long puts that are here and the amount of adjustment it's going to take to get there, if we do get the dealers to adjust over time, it's going to be incredibly hard to move through this area. We've seen this over the last couple of weeks. This is developing. This is becoming stronger. I want everyone to pay attention to this, because even if we break 4,200, we're going to have a hard time getting up to 4285, and if we do get the dealer adjustments through 4285 so that this is neutralized by the end of the month, we've got a whole bunch to plow through up here, which is going to make it really, really hard to advance. So the bear case is stronger, the bull case is weaker, although there are a lot of folks who are targeting the 4200 here, and we want to pay attention to that. So the summary for today, continued caution. We said this yesterday, I'm saying it again today. The dropping of the delta and the gamma levels is not conducive to upside momentum. Make sure you understand the rationale behind that and how to interpret the charts. Longer term, the market model is improving, but it's still bearish. We have to remain above that ribbon. If we lose the ribbon, all bets are off, and I think we can start playing the downside. Shorter term, we did have a breadth failure on Wednesday. I didn't really talk much about that, but go back and look at the tick USC charts if you're following on TradeStation or on TOS. Those indicators are available in the Discord, and you'll see that we did fail breadth, and that basically resets us. We need to resume the up move. It's obvious, but we really need to see that, or this bull case is all but done. The wing charts are showing a continuation of addition of puts and reduction of calls. I think that's important. Downside participation is building, and when that happens, that's going to be a boat anchor on everything. And then that 4057 level is kind of the line in the sand for the lower bound of support. So that's it for today. If you like today's content, please join us at GammaEdge.us. That'll take you to a sign-up page that'll get you into the Discord, 14-day free trial, all the tools turned on. Come on in. We've had a inrush of some new folks lately, and so a lot of questions being answered, and it's just a good time. Follow us on Twitter at GammaEdges with an S, and then here on YouTube. If you like today's content, please push that like button and follow us so that you can get notified the next time we post something. So with that, I bid you farewell. Thanks, everyone. See you in the Discord, and good luck in your trading and learning. Take care.